What's up, everyone? It's Caddy with Money Investing. Welcome on board for yet another start to the week. Perhaps one of the most exciting and crazy weeks for 2022. So if you guys can actually see me and hear me, just give me a thumbs up. We should be all set and all good and ready to go. The audio and the video should both be working well. So again, just give me a thumbs up in the live chat and everything is working. The NASDAQ ETF QQQ down another 1.6% right now. We got the SPY down over 1.24%. And we've got the Dow Jones falling a little bit over 94 basis points as well. So needless to say that this is turning into even more painful than what it was, last week. The volatility is on the move. The VIX is up a little bit over 15%. So definitely, a strong move to the upside. We're back over 33. And 37, 38 is going to be that next level to really watch for the VIX. Something that's been completely broken apart is going to be cryptos. We got Bitcoin down a little bit over 7.6%. We got Ether down a little bit over 13% right now trading under $2,200 for Ethereum. And for Bitcoin, that next support, unfortunately, is going to be sitting at close to $30,000. That's going to be that technical support level to watch. But these are the earnings. So we have IBM, Logitech, Johnson & Johnson, General Electric, Microsoft, Texas Instrument, Verizon, 3M, American Express, Lockheed Martin, all these companies reporting. But then tomorrow after the close, we got the big Microsoft coming out with their numbers, another tech company, another large cap stock. And then of course on Wednesday, we've got Tesla, we've got Intel, we got Boeing and AT&T. And then on Thursday, we've got the largest public company in the world, Apple, to report their earnings after the close, along with MasterCard. We got Nucor, McDonald's, Visa, Robinhood, and then next week is when we have Google, Amazon, and Facebook to report to kind of wrap up the FANG stock earnings as well. So very, very exciting week ahead, filled with lots of earnings. And this, of course, is going to be our economic calendar for January 2022. So Tuesday, which is tomorrow, January 25th at 10 a.m. Eastern, we've got the consumer confidence. And then we've got the big FOMC meeting where our beloved Jerome Powell is going to be on deck giving a press conference talking about federal monetary policy, interest rate hikes, and of course their views on inflation, unemployment, and whatnot. So press conference at 2:30 p.m. Eastern. The actual FOMC meeting is going to be at 2 p.m. and the release of the statement is also going to be at 2 p.m. Eastern on Wednesday. So right before Tesla reports their earnings on that day. So very, very exciting stuff coming up in the markets. And of course, we've got the GDP estimates coming out along with pending home sales and the PCE and core PCE numbers and consumer sentiment later this week as well. This right here is straight from their summary of economic projections. The last time the Fed released this was back in December, so last year. And again, this is the first meeting of 2022 when the Fed is kind of getting along and getting together, and Jerome Powell is going to be giving us a speech. But this is from December meeting. And for 2022 right here, these are the numbers that we're going to be focusing on. It's going to be interesting how the Fed kind of revises this data up or down as the year goes by. And the next time they're expected to release a summary of economic projections is going to be next year. But they are expected to see inflation substantially come down, which, with interest rate hikes, it's going to be very interesting where we end up in 2022 with PCE inflation. They're expecting it to drop by 50% from 5.3 to 2.6%. And for core PCE to also somewhat drop 50% from 4.4% now to 2.7%. So, and then of course, longer term, they expect inflation to be kind of stable at around 2%. So we'll get some good estimates and guidance from Fed as well moving forward. So $130 billion wiped off of crypto markets in 24 hours as Bitcoin, Ether dropped to multi-month lows. So cryptocurrency market had around $130 billion wiped off its value over the last 24 hours as major digital coins continued their multi-day sell-off, and Bitcoin was last down to 33,000 roughly. And Ether plunged under 2,200, down a little bit over 13% right now. And they are both down a little bit over 50%, I believe, from their all-time highs. Bitcoin and crypto have been reacting much more violently given the nature of the asset class, and we're likely to test 30 to 32,000 given the current sentiment and momentum. Vijay Iyer, president of corporate development and international expansion, and Iyer said that if Bitcoin holds above 30,000 on a longer time frame, such as a 1 week, there could be a base formed at those levels before the market starts to move higher. So again, we're kind of moving towards like a risk averse environment where people don't want to take as much risk. They want to move more towards safety. So if you look at the risk curve, we're moving away from riskier assets over to safer one, which is your cash, which is your bonds, which is your dividend stocks, right? So some of those companies that pay a very high dividend, energy stocks have been pushing higher as energy prices continue to move up. So that's really kind of like the shift we're seeing for the markets. High speculative companies, down 70, 80% from February 2021. So they actually started their correction way, way before, we saw the FANG stocks sell off. So speculative companies first sold off February of 21. Then we had sort of like profitable and high multiple companies, mid P's, high P companies. And now we have pretty much the entirety of the market and FANG stocks also selling off pretty much, down like in a correction in a bear market right now, down about 15, 20%. And Fed rate hikes will intensify a global debt crisis, research warns. So the FOMC meeting again meets this week, but in a report published Sunday, the debt campaign highlighted that developing countries' debt payments rose 120% between 2010 and 2021, and are currently at their highest level since 2001. The sharp increase in debt payments is hindering countries' economic recovery from the pandemic, the report suggested, and rising U.S. and global interest rates in 2022 could accelerate the problem for many lower income countries. So that's something that we also have to keep in mind and consistently watch, on a closer basis. So I will get to all the comments on the live chat here in just a minute. Just gonna get through all these upgrades and downgrades. You guys know the daily routine, but none of this matters right now. Upgrades and downgrades seem to not matter at all because everything is just selling off. But Morgan Stanley reiterated Alphabet as overweight. UBS reiterates Chipotle as a buy. Oppenheimer reiterates McDonald's as outperform. Morgan Stanley reiterates Tesla as overweight as well. Goldman Sachs reiterates Microsoft as a buy and sees strong momentum heading into Microsoft's earnings report on Tuesday. We got Bernstein reiterating Amazon as outperform. The amount of outperform and overweight and buy ratings Amazon has received over the last 2 months is incredible. I mean, I feel like almost all big bank and institution has put out an outperform or an optimistic sort of call on Amazon. And, of course, it's been selling off with the market. But that is just very, very interesting because I think Amazon's come up more than any other stock in this sort of upgrades and downgrades that we go over pre-market. But Wedbush downgrades Snapchat to neutral from outperform. We got Evercore reiterating Apple as outperform and Jefferies downgrading Netflix to hold from a buy. And they said that they lack conviction in the stock after the earnings report from last week, which of course the stock sold off a little bit over 22% or something from over $500 now down to under $400. But anyway, let's take a quick look on the markets again. ETF, Nasdaq ETF, QQQ down over 1.84. S&P continues to sell off, down about 1.49, and the Dow Jones is down over 1%. Right now with the volatility now up over 15%. This is certainly the levels that we have seen back in December. So this is like a month and a half high. And before that, the last time we actually saw these levels was back in January of 21. So almost about a year ago. But let's see. All right. Let's take a look at some of the comments here. We'll set up our charts, the four split screens here. And then I also want to go over something very, very interesting. This is something that I read in that book as well, The Psychology of Money, which I highly encourage you guys all to read. And it kind of goes over your sort of like your wiring of your brain and the mindset around investing and money and whatnot. But this right here, the 4 most dangerous words in investing. Does anybody know what those 4 words are? The 4 most dangerous words of investing. I just want to see if anybody knows in the live chat what those are. And this again was from the book Psychology of Money, but I want to see if anybody knows here. Let's buy the dip. FOMO, buy the dip. Nope. Inflation, crash. Nope. Uncertainty. Those are all one words, you guys. We're talking about 4 most dangerous words. Let's buy the dip. No. Go all in. No. So I guess, all right. So I'll just, yes. So, all right. Civita's got it. Civita's got it right there. This time it's different. So, in that book, to quote Sir John Templeton, the 4 most dangerous words in investing are, this time it's different. And what that really means is that when you are really fearful about the economic recovery for the US or anything for that matter, for the stock market in general, you start to think that, you know what, this time it's different. This time we're not going to see a recovery. This time the markets are coming down for real. I mean, this is, and you can go over several of these stories. I mean, I'll share this article in our Discord, but these are real stories that you'll notice that the year was 1930. Robert had $10,000 invested in the stock market, a lot of money back in 1930, but Robert thought to himself, we are in the middle of the worst economic downturn in this country has ever seen. He was right about that, but what he did next was a mistake. He thought that this time is different. That's what he thought to himself. And the markets are dangerous. Robert took all his money in cash and buried it in his backyard. I don't know if that part's true, but 10 years later in 1940, his $10,000 had he kept it in the stock market, would have been worth over $11,925. This right here is even better. So, the year was 1940. John Canterbury had $10,000 invested in the stock market. He thought to himself, you're in the middle of another world war. Countries are collapsing. The economic predictions are dire. This time is different. And John took the money in cash. And 10 years later in 1950, his $10,000, had he kept it in the markets, would have been worth over $35,000. And there's plenty of stories like this over and over and over again, right? So, and that's kind of like very interesting. That's also what I read in that book, that it is that everybody starts to think that this time it's actually different. And it very well could be, but the probability is just so low, given the historical environment that we've been, given all the data that we've collected, of course, 75 plus years. And this is, I think, the 37th or the 30th correction in the S&P 500, and almost all of them have been erased by the markets over time. The average time it takes to have a bear market is 1.86 years. So just under 2 years, we do get a bear market. And an average correction has lasted for less than 100 days. So about 3 months, we've actually, erased that correction. And a bear market, I think we've had for about 7 to 8 months is how long an average bear market has lasted in the market. So that's kind of like what I wanted to go over, but we've got about 3 minutes left for the markets to open. Let's just quickly take a look at Tesla. We'll talk about AMD, Nvidia, and then let's just put up Apple as well. And let's see what's actually moving. So Apple down 1.5% on 159. 155 is a support, but 138 is a level that I would be watching very closely. AMD is down another 3.6%, now coming down under $118. And Nvidia also down a little bit over 4.7%. 222 for Nvidia. Wow, just a big drop here for Nvidia right now. And 3 minutes left to be less wealthy. That's incredible. That's the first time I actually heard that. That's awesome. So, all right, what do you guys think? Let me know in the live chat, red or green. What are your thoughts? Of course, we are starting off with the markets being super red right now, pre-market, but I want to hear from you guys. What are your expectations on the day? Are we going to see a red or a green day today? So I don't even expect anybody to say green. Well, there's a couple of people. Pandemonium, green, pretty optimistic. That's very solid. But okay, lots of people just big red, badly red. Yeah, it is about to get very real very quickly in the markets. I think the NASDAQ is still down over 15%. So if you come over to our main charts, you'll notice that from all-time highs, we are down a little bit close to over 15% after the open today. We're expected to open somewhere around 13,500. So we're going to be down about 16% from all-time highs. And of course, for the S&P 500, we're down a little bit over 8.8%, and we're expected to close somewhere open around 4350. And we're going to be down a little bit over 9%. I think the S&P really wants to correct. I think the S&P 500 wants to enter an official correction. I think the last time we actually saw that was, in fact, in March 2020. And until now, we've only seen some small dips here and there. Maybe like a small correction back in September 2020 here, when the markets were down over 10%. But it's been about almost 2 years without a correction for the markets. And, as mentioned earlier, 1.86 is the average time it takes, 1.86 years for S&P to correct itself. So, all right, so let's see. So what I've really mentioned in our Discord channel is let the selling pressure get exhausted, right? And what we're really waiting for is for the bears to finally give up. And kind of have that selling pressure be exhausted. It's the same thing when a stock price is going higher. Oftentimes when something is going up in value, we see the stock price going up rapidly. We tend to gravitate towards that stock. We want to buy it because we think that it's going to keep going higher. And that's the same thing with when the stock price is coming down. We think it's never going to stop. It just keep going lower and lower and lower. But eventually both bull markets and bear markets eventually come to an end, and we do reverse. So it's not like the bear markets like this, corrections and selling pressure. It's just going to keep going lower and lower. Eventually, it is going to find some support, and the selling pressure will exhaust, and that will give us the opportunity to dollar cost average if we need to. So All right, so Zoom, we got an alert went off, but I'm going to quickly switch over to the actual benchmarks here. So DJI is the Dow Jones, and the S&P here. We're going to switch over to the 5-minute charts. Maybe this live stream will be a little bit longer than usual because we are in very, very unusual times right now. But all right, so we got the S&P, NASDAQ, and the Dow Jones here. All right, let's take a quick look at coin. Wow, coin should be down a lot. Yes, so it's down another 11%, down to $170. Again, this is very correlated with Bitcoin, so it's not a surprise. That Coinbase is down given how much Bitcoin is down right now, a little bit over 7%. But this is all of our crypto mining stocks, crypto related stocks as well. So Marathon down another 11%, now under $20. CleanSpark down 14%, just over $5 right now. And then we got Bitcoin Strategy ETF down another 12%. Riot is down over 12%. Grayscale Bitcoin Trust is down over 11, almost 12%. So that's what's happening in the crypto market right now. It's just lots of selling pressure. Volatility up over 17% now. This is exactly the level seen from back in December 3rd. And if this is going to be anything like December 3rd, if today is going to be anything like December 3rd, you'll notice that we did get up to 35, 36 levels for the volatility, right? So we did get high, but we did see the buyers also step in. So on that day, we had the buyers step in, hence the longer wick for the VIX. And what happened after that? The volatility dropped over 54%, and the NASDAQ and the S&P rallied. Now, again, it's going to be very interesting for us to see if the volatility continues to stay high, continues to stay elevated and go higher, or if we're going to see any type of buyers kind of step in for the markets today. Very, very interesting day. I think this week in itself is very exciting, but let's take a look here in some of the individual companies as well. Steve, you gotta calm down, man. We're all in this together. And again, I think you're part of our Discord as well. So like I said, we're a team at Money Vesting over here, and we're all here to support each other, help each other. And through this time, of course, it's not good. By the way, that's one of the reasons why we also started options now. So I started a new channel, Options Alerts, which I will be doing now to kind of generate some income from the uninvested cash we have. And at the same time, the shares that we own, we can also generate passive income using that. So I'll only be using 3 strategies. And again, I'm introducing option strategies and trading part of our Discord as well. So hope you guys are all excited. I'm super excited to actually get started with options this year. So perfect. Let's take a look. So Arnold Palmer, so we selling losses to buy the dip? Not quite. Again, I don't quite believe in just if you're holding on to a fundamentally strong company, if the company is very good in terms of the revenue growth, the earnings growth, trading at a reasonable valuation, because those are things that are very, very important to us, then I don't personally sell at a loss only to buy back again later, because that's going to do a couple things depending on which jurisdiction you're in. If you're in the US, first of all, that's going to trigger a wash sale, right? So your cost basis will be adjusted if you buy within 30 days. So if you sell a stock at a loss and you buy the same stock back within 30 days, you trigger a wash sale, right? So that doesn't do you any good. And at the same time, I think the best thing to really do is just simply dollar cost average on your long-term positions and not really worry about the day-to-day fluctuations. Simply focus on the business itself, right? So if you've got quality companies, fundamentally sound companies that the revenue, the earnings expected to grow, then I wouldn't really worry about the price itself. And you just got to make sure that the valuation is good. So the stock that I'm really watching right now is Upstart. Upstart is down another 7.6%. So I will be looking to kind of sell some cash secured puts on Upstart to get my cost basis lower, and at the same time, while I wait, get a premium for that. So definitely looking at the $75 strike for Upstart. $80 is that next support, but would love to kind of get in on Upstart at a lower valuation because it's definitely come down quite a bit. Coinbase, I'm definitely looking to kind of add more shares at this stock as well, because this is like a ridiculous valuation for Coinbase if you ask me. So, definitely very, very low for the growth, for the revenue, everything that they're expected to do this year. I think it's trading at a super cheap, like a no-brainer sort of like price at the moment. So let's take a look at PayPal. So PayPal 2022 year to date, it's already down a little bit over 17%. We're now down to 155. So technically that next support is at 140. We do have like a small gap here to fill, which, PayPal could come down and kind of fill this gap in. But just imagine from our pre-pandemic levels, PayPal is only up 24%. That's the story with a lot of stocks. I mean, if you compare the pre-pandemic levels, pre-pandemic highs for a lot of these companies, and then you see where they're trading right now, they're only up 20, 25, 30%. And just to think how much their businesses have grown during this pandemic and during the work from home trend, I mean, PayPal's total payment volume has just skyrocketed, right? Their transactions, their average customers' average transactions per customer has also grown. So all those metrics are moving in the right direction, yet the stock price is moving in the complete opposite direction. So those are, and I feel like now it's getting to a point where a lot of the fear and sentiment is just taking over the market right now, and we're just seeing lots of selling pressure for without having to do like with any logic as to why these companies are selling off so much. All right, so let's see. So let's take a look at Apple. So AAPL. So Spain without the S. So 155 is that next support. We're actually coming down to our 100 SMA. That's the white line you see on the chart. So definitely down a little bit over 1.5% here. But 155 is going to be that next support for Apple. As we've mentioned before in the market updates channel, I wouldn't be surprised if we do see a 15% drop for Apple, but I would very much be encouraged to buy more shares at close to 138. So I think that's the level that I'm really watching for Apple to kind of dollar cost average into as well. All right, but let's take a quick look in the markets. There's literally nothing green. Nothing. I mean, the only stocks that are green on the watch list today are Peloton, which is only up 0.5%. So I can't even imagine what our Finviz heat map looks like on the day. I mean, it's going to be pretty brutal. Walgreens is the only stock that is slightly, pretty much flat here right now. But let's see. Yeah, so Philip, I will be doing an options video very soon. I'm actually going to start that video first with our private members, like in our Discord and our Patreon. I will do like a private video with them as well. Kind of going over my strategies. There's only two. They're not really that complicated. You guys are probably way more expert in selling covered calls and cash secured puts than I am. But I'm just like really getting started into that this year. But the whole point of that video will be, what strategies I'm applying. And again, with cash secured puts, the only idea is to do that with companies that you want to own long term, that you won't mind getting assigned for the underlying stock, right? So that's a way for us to lower our cost basis at the same time and collect a premium if the option does expire worthless. But if it does get assigned, needless to say that is a stock that I want to own anyway. So it doesn't really mind. It just helps me lower my cost basis anyway. So those are some things that I will be talking about in that video. And yes, we will be doing like videos on options. All right, let's see. So Peloton being up is a joke. I agree. I mean, Peloton is the only stock that is somewhat green right now, up over 2.5%. Activision is up. So, after that acquisition from Microsoft, putting a fair value of roughly $87, $88, I think still slightly there's some margin for profit, but that deal is also expected to close in 2023. It's about a year from now. So, we'll see if Activision continues to kind of trade at this fair value, or there's also a possibility for the deal to maybe not go through fully, or some hurdles to come in the way. And that could definitely, cause Activision to be a little bit more volatile. But nonetheless, let's take a quick look at banks. So all banks down, everything. I mean, PayPal, Square down over 3% each, Deutsche Bank down over 4%, Bank of America down 2.5%, Citigroup, MasterCard, Visa, Berkshire, JP Morgan, Morgan Stanley, everything is down. Energy is down as well. So oil prices are pulling back slightly. Crude is down over 1.3%, down under $84 a barrel. And then we got Brent, just under $87 per barrel right now, down a little bit over 1.2%, dragging energy stocks with them. So, all right, I'm going to have to kind of reset this chart. Let me just see. S&P 500. So, all right, I don't know why this chart is not showing up. All right, there we go. So there we go. 1 day chart, we're going to go over. So energy down about 1.5%. All right, there we go. Now it's starting to load up a little bit. But gold and silver has actually done well. I mean, if you take a look at some of the commodities here, so silver is up over 3.5% over the last 5 days. If you come over to year to date, I think silver and gold are green. Silver is up over 3.8%. Gold is up 1.8%. Energy is definitely up close to 8% right now. And we got the 10-year yields, of course, up over 6%. Then every sector, literally everything is down. I was doing an analysis, on Finviz. Finviz, I think, Ranji, shout out to you. You also mentioned it, but we were looking at the screeners, and they were showing that over 75% of the stocks in the U.S. are down year to date. Only 25% are actually green. And this again is our, select sector S&P 500 indices. So we're looking at energy, which is up 8%. That's the only sector that's up. Yields are up over 6%, silver and gold is slightly up, but everything else. We got staples, utilities, industrial, financials, materials, discretionary, healthcare, technology is down over 13%. Discretionary, which is, actually your cyclicals, which include your Amazon and Teslas, down over 15%. And then we got biotech down over 22%. Biotech just continues to get hammered here on the year. And then, of course, Bitcoin all the way down here, down about 26%. And for some reason, Ether is down over 40% year to date. So absolutely bloodbath across the board for the markets. But so far, intraday, it's not as bad. I mean, on a day basis, yes, we're still down about 1.5%, but on an intraday basis, we're still seeing some, potential here for the markets in the first 15 minutes. We're still pushing higher, but I don't want to speak too soon. All right, so let's see. Let's just go over some individual companies, right? So just give me a ticker, and then we'll just go over those. So excited for options plan. Perfect. Happy to follow you. Doomy, thank you so much. I really appreciate it. Aaron, welcome on board. Happy to have you. Tesla, $900. We're starting to break down over 5%. So 779, 780 is going to be that next support level for Tesla. So we're almost like testing this again, but this time we're below the 100 SMA, and we're now starting to break under $900 as well. So 775 is going to be that next support level. Facebook, next technical support. Wow, look at that. 296. We actually got a perfect validation at that support. So this horizontal green line you'll see on the chart was sitting at 296.19. We came down to 296.14 before the buyers stepped in and we pushed higher. Facebook also, in my view, trades at a very, very reasonable valuation. I mean, if you look at it on a forward basis, the company's got the best balance sheet on Wall Street. It's got great margins, decent growth, and the valuation is also really low. So Facebook, I really like under $300. And again, my price targets, you guys already know, at north of $700 if you have done, if you watched that video that I did on Facebook. C Limited. So C, I think there's a couple stocks. So C Limited, Mercado Libre, Roku, Square, those are companies that are still trading somewhat of a higher multiple, right? So if you come over here, let's just quickly go over, Seeking Alpha and see if you can actually find the valuation for C Limited. So we'll just go over here, the valuation for C Limited. So we don't have profitability. We don't have actual earnings or EBITDA. So enterprise value to EBITDA is also not available, but price to sales on a forward basis, which is going to be over here, we're trading at just over 9. So definitely it's trading at a very reasonable level now, but price to cash flow over here on a forward basis, we're trading at over 417. That's very, very rich for the company. So 133 is going to be that next support from a technical standpoint. Definitely very, very oversold. Needless to say, I mean, the RSI MACD is so down. But those right there are going to be some support levels to watch at close to 134, and resistance now is going to stay put at close to $203. But the valuation is still high, so if you're looking at it from a long-term perspective, I would definitely, in my view, wait for the price to come down. If not, then if you're looking at a technical basis, 134 is going to be that support. Murik, welcome on board from Qatar. That's amazing. I'm actually thinking about going there for the World Cup this year. So for 2022, might be there to catch if Portugal qualifies. That's the main thing. If Portugal beats Italy in the qualifiers, then I'll definitely go watch the World Cup later this year. But we'll see. All right, so let's take a look at Google. So Google, let's see where it is. So 2552. So look at that. Google also coming down to 2499, so almost at 2500, and now starting to get bought up once again. So still down a little bit over 2% right now, but 2540, 2500 pretty much is going to be that support right now here, and the resistance is going to stay put at close to 2670 level. So this is a support that we validated from back in June, and right now we're just trading at those levels for Google. Yeah, I mean, Italy, I really like the team, but, I really just want Portugal to qualify, and then that's it. Then I can actually watch the World Cup. All right, let's take a look at Netflix. So Netflix down another 5% today. I mean, RSI, wow, RSI is 9.99. Salohan pointed that out. Thank you so much for doing that. But yeah, incredibly oversold right now, and it's trading below all the moving averages. There's absolutely no selling exhaustion here for Netflix, and it got a downgrade today. Didn't really help the situation. It would have been nice if Bernstein decided to downgrade the stock last week, or Jeffries, not Bernstein. Jeffries decided to downgrade the stock last week on Friday. That would have been kind of mix of bad earnings and downgrades, kind of pushing the stock down 20+%. But then you've got another big catalyst on Netflix. It's unbelievable to actually see Netflix now trade at 376, under $400. Crazy. I mean, this is just crazy. On Friday it was acting like it was like a biotech stock or something, like a penny stock, that was down over 21%. But this was like a really, really large, can be considered as a blue chip company. So interesting. Very, very interesting. Yes, so Sheetal, that is because of Ronaldo. You know me, come on, man. Got a poster right here to prove it. But let's see. All right, let's take a look at NEO. How's the stock doing right now? So down over 8% right now, coming down to $25. How is China doing right now? So NEO is down the most along with XPeng. So NEO obviously hitting a new 52-week low. And the next possible support right now for NEO, unfortunately, is going to be sitting right at $20. So $20 is going to be that next level to watch. Resistance right here, and the support that we validated from October of 2020. So that's going to be the level to watch right now for NEO. Very, very strong downtrend. So we just got an alert for volatility, but before we jump there, XPeng down over 6%. Li Auto is down another 4%. Alibaba is down over 3.77. So a lot of the Chinese stocks are down, and the entire electric vehicle space is down except for Toyota. Toyota is the only stock that is up. This is our EV watch list right here. So NEO, Lordstown Motors, XPeng, Hyliion, ChargePoint, Nikola, Volkswagen, Tesla, GM, Ford. Everything is down between 4 and 9%. So lots of volatility. So VIX up over 18%, but we did get an alert on VXN. We're up over 12% for the volatility on the NASDAQ. So do you also know the average recovery time of a correction? So yes, average recovery time after a correction was less than 100 trading days. I shared this information in our Discord. So if you go there in our market updates channel, you will see like a whole note going over how many corrections we've had, the average correction time, how much average time it takes for us to see a correction. All that information is there, but less than 100 days. But if it's a bear market, it takes about 6 to 7 months. So a little bit longer than of course a correction. So Mids, what percentage of your portfolio is in options? So I'm literally just getting started with options now, and I'm only going to be doing selling covered calls and selling cash secured puts and buying some leads. So right now it's 0%, but eventually my goal is to get that going sometime later this month, and of course in 2022. That's really what we're focusing on as well. All right, so Corsair, let's take a quick look. So Corsair is down a little bit over 7% right now. $18 is that next support that I have on the chart for Corsair Gaming. So that's a previous support level right there. Is going to be that next technical support. I think Corsair's earnings have really concerned me. The valuation's definitely low, no doubt. The valuation where it's trading at right now, I mean, under 18 times PE, just over 1 time sales. Over 22 times price to free cash flow, and enterprise value to EBITDA also sits at just under 10. So valuation, we don't have a problem with. But it's just a quarter over quarter growth. You'll notice that it's been kind of trending down. So we went from 556 million down to 529 million, down to 472, down to 39, and the margins also decreased, right? So this is what I'm really going over right now is quarter over quarter. You'll see a decline here in revenue and margins and profitability in general. So I really want to see better numbers be reported by Corsair because before I really consider kind of adding more to the existing position, which I have is very, very small right now. But Corsair definitely needs to focus more on growing their business, before we can start to really consider it from a long-term perspective. But right now the valuation is still very low. And from a technical standpoint, $18 is going to be that next support. Yeah, so this Keck says this market not going up until big tech fell minimum 20%. That's when it will affect 401ks. So yeah, I think it's already starting to catch the attention for the Fed. I think Jerome Powell has got a big job to do this weekend. This Wednesday, this coming Fed meeting, because at one point, I mean, they've really cornered themselves, right? I do think that interest rates were to some extent delayed only because now when we get into the situation where markets are coming down and inflation is high, and you've got to rate hikes, you got to hike rates. I'm sorry, you got to hike rates. That's a very tough situation to be in. And the reason is because when the markets are coming down, and hopefully, again, this is my expectation, but hopefully we don't go through a period where there is high unemployment. Right now, the low unemployment rate is the only thing that's giving the Fed green light to move forward with the rate hikes. Because if unemployment was high, inflation was high, and the markets were down, that would have been like the worst situation, because then the Fed can't lower interest rates. I mean, the lowest they can go is like zero, right? Where do we go from there? So, the only tools the Fed would have then is to continue their mortgage-backed security purchases, right? Cancel the tapering plans, and of course move along with buying assets every single month. But then they kind of risk overheating the economy more as they supply more money. So it's like a very very difficult situation for the Fed. So I think inflation is the number one problem that needs to be controlled more before it becomes a bigger problem than it already is. So from an economic standpoint, I think that's the big question everybody has, is where inflation going to settle in 2022. But there we go. NASDAQ down over 2.3% now. So all that buying in the first 10 minutes got faded, and we are now reversing back down. S&P is down close to 2%, and the Dow Jones also down over 1.6%. Every single day of 2022 has felt like one really long red day. The entire 2022 so far, the month of January, has just felt like one really long red day. That's all it's felt like so far. So, and is banking stocks good to fight inflation? Well, there's a couple things that I would watch in banking sector. The number one thing, one of the biggest reasons why these all banks were down on earnings and they're still selling off is the cost of labor, right? So wage increases. That's one of the biggest problems that banks faced. As inflation's going higher, it's becoming difficult to actually hire the right people, right? So Joel's number is still high, but it's very difficult to actually find the right people for their jobs. And as a result, they end up paying more for analysts. So cost of labor is high for them. That's affecting their profitability, their bottom line. So interest rate hikes that are supposed to happen this year should kind of balance the two out. So even if wages are going up for JP Morgan, profitability is lowering, the interest rate hikes should balance that off, right? So when interest rates go up, they can actually charge more to their customers, right? Borrowing cost goes higher. As a result, banks benefit from that. But that's going to be a balanced effect. But if cost of labor starts to come down and interest rates continue to go higher, inflation starts to move back down, I think in that scenario, JP Morgan, Morgan Stanley, some of the banking stocks should start to perform really well in terms of earnings as well. But right now, I mean, the technicals are just so broken. I mean, it's starting to break down below 145 as well. The next support from a technical standpoint is going to be 127 for JPM. Let's take a look at Visa. So Visa is down a little bit over 2.5%, so breaking down under $205, $206. So this will turn into a resistance for Visa. And the next support is going to be $190. So that right there is going to be that next level to watch for Visa. All right, VIX, we're up over 21% now. We're getting up to the same level. So December 3rd's high was 35.32. So just going to put a line right there. Right there, 35.30 was the high for December 3rd. So this is about a month and a half, almost 2-month high. And of course, the markets are doing nothing but selling off even more. So Visa yuan over. Yes, I can check BNTX, that's BioNTech. Let's take a look. So BioNTech now starting to break down even further. I think the valuation is low for these companies. But one of the things that really concerns me about both BioNTech and there was another stock we were going over, Moderna, is that the revenues and the earnings have been a little bit inconsistent, right? So, I mean, if you take a look at it from an annual perspective, 69 million, 150 million, then 121 million with a down year, then profitable and a big jump to 549 million. So it's been a little bit inconsistent in annual revenues. And what I really like to look at is consistent revenue growth, consistent free cash flow growth, consistent earnings and profitability growth for any company over the last 5-7 year period, so that we can actually, with a high predictability, start to forecast, right? With some accuracy, we can start to forecast for the future. But for Moderna and BioNTech, they're both trading at very low valuations, but definitely getting a big breakdown below certain support levels. So next levels to watch going to be roughly under $90. That's the next technical support, but that is going to be big sell off for BioNTech. So very oversold. I mean, everything really is in this market oversold. But we really need to kind of patiently wait for some market exhaustion here, for some selling exhaustion. Peloton, 2 back-to-back days. What's going on here? What am I missing? What is going on? Up over 11% on Friday, up another 6% right now. So let's take a look at AMD. So Advanced Micro Devices. Breaking down under 118. So we got the 200 SMA sitting right at $108. So that's going to be a level to watch very closely. 200 SMA, all the way down to $99 to $100. So $100 is going to be that next support. Arun, should we buy today? No buy alerts today in Discord because I'm live streaming right now. So yes, as soon as I'm done with the live streaming, I will send out some alerts. But there's not going to be a ton of buying yet because, as I said, I'm waiting for selling pressure to get exhausted. And this type of momentum to the downside doesn't really quite show us anything yet. There's still, lots of, look at that for the volatility, guys. This might be signaling something. Again, I don't want to call the bottom here or anything, but this definitely gives us some more guidance, some more understanding as to what's going on. And the volatility is up to 35.3. This is the same level from back in December before the VIX kind of sold off. And what happened with the S&P back then? So we come over to SPX. So I'm just going to delete all this. So December 3rd, we were right over here. Actually, we were right there. So this is December 3rd before the markets, right there. We were down from highs, down about 5.25%. And as the volatility came back down over 52%, the S&P ended up rallying over another 7%. So right now, I mean, it's just a big sell-off here, down about. So 10%. We are now officially in a correction. S&P 500 now is officially in a correction in 2022. So nobody can take that away from the S&P. We're down 10.5%. Boom, right there. The Nasdaq was down over 15% already. I think the Dow Jones also might have entered an official correction here. Now it still has a little bit to go, 1.2%, more or less. Something to celebrate. Yes, it sure is. Sure is. Sure is. Yes, so VIX in March in 2020 was 70 to 80 levels. It was much higher. I agree. So if you come over here, you'll notice we were all the way up to highs of actually 84. So that was a jump, I think, of over 500, 600% for the volatility. So over 600%, almost 700%. So another very big spike in the volatility. But I also pointed out in our Discord, don't let this go to waste, right? We don't see bear markets, we don't see corrections all that often. I mean, think about it. S&P 500 had a correction in the last 2 years. This is the first time we've actually seen that since September of 2020, right? So last correction we actually saw was back in September 2020. So we don't see this, very often. So don't let this go to waste. If there's quality companies, if they're fundamentally, good companies that are coming down to your buy target, see them as buying opportunities, right? Instead of, us, again, psychology plays a big role. We tend to get very emotional with the markets. And, if we see the next person selling and, taking their loss or whatever and getting out of the markets, we tend to kind of be like very fearful as well. We want to be like, you know what? I want to do the same thing. I want to get out of the markets as quickly as possible. But always think of them as assets, right? These are nothing but very strong cash flowing assets. And they're coming down. They're becoming cheaper, right? So buy target for Facebook, I think 296 has been validated nicely. We're still just a little bit above 296 right now. But this is kind of like a support, a technical support. But again, if you're looking for buy targets, this can certainly come down lower. I wouldn't mind dollar cost averaging at these low valuations, but just remember that the prices can certainly come down even more because what we're waiting for now, again, is market exhaustion. We're looking for sellers to really get exhausted, right? As bulls get exhausted on the way up, so, oftentimes, obviously none of the rallies go up indefinitely. We don't have a stock that keeps going up and up and up. Eventually it starts to top out, starts to get capped, and we start to see that pullback. Same thing is true with the bears and the selling pressure. Eventually these things will stabilize. And it's not like Facebook is going to keep going down every single day. So valuation's low. I like 296 support from a technical standpoint and where the price to earnings and price to sales multiples are. Wouldn't mind dollar cost averaging, but going in fully aware that this could come down even more. What is Upstart doing? So Upstart down over 16%. Wow. I mean, this is just incredible. Incredible. So resistance right now, $107. Support all the way around 49 to 50. So this right here, $81, 80 bucks something, was a previous support that we're certainly breaking down right now. But what a drop here in Upstart. I mean, I can't believe that this stock has come down from 400 down to like $78. Oh my God. We got to check the valuation of Upstart after today's closing price. Because, I mean, this is just ridiculous. Yes, Canal brings up a great point. What does Upstart do? Can't hear you. Can't hear you at all. But that was a great meme. That I laughed for days on that meme. So volatility pushing higher even further. So we just broke our 2-month high at over 35, and the high for the day 35.8. Nasdaq, S&P on the day still doing like a little bit okay. They're still stabilizing, but the Nasdaq definitely down over 2% is a big move. What parameters show that the market is exhausted? Well, the biggest parameter is that you don't see any more selling pressure. You don't see any more red on the screen. That's the biggest parameter, right? I mean, right now, Upstart's down 14%, Nasdaq's down 2%. If you come over to some of our FANG stocks, right, Tesla's down 7%. Let's just take a look at our Finviz chart here, heat map. How does this look? Wow, look at that. Look at this. I mean, this tells you how much sentiment shift we're seeing, right? Everything across the board. I mean, if you come over to the full market, not just the S&P 500, this is the state of the market, you guys. This is the entire market, not just the S&P 500. So we've got software getting destroyed, technology getting absolutely hammered. This right here, semiconductors, nowhere to hide. Nvidia down 4%, AMD down 4%. Intel kind of flat, not bad because it's already trading at a low valuation. Financials, all banking stocks down. Cyclicals, we got Amazon, Alibaba, JD.com, Tesla leading the way in automotives, down over 6%. Then we got energy, real estate, utilities, basic materials. We got healthcare, industrial. I mean, it's all over the place. The only stock that is going up today is Unilever, up over 7%. And we got Comcast up over 1.6%. T-Mobile, it's up over 2.5%. Verizon slightly up. And Vodafone, which is, I think, based in the UK, slightly up over 6%. Yeah, overall, I mean, British American Tobacco is up over 2.7%, but overall, there's just pretty brutal day. So again, market exhaustion, you can start to see the market stabilize a little bit, right? Consolidate, not sell off more. RSI support levels start to get validated, and we now see some more consolidation. But this is going to be the entire the world, basically. Canada and North America, I think, is going to be over here. Then we got Ireland, the UK. UK Vodafone's up, and British American Tobacco and Unilever pushing higher. Germany down, France, Netherlands, Switzerland, China, Japan, India, South Korea, Australia, every place. Every single country basically saw the markets red for their respective indexes. So, all right. Look at that volatility. Oh, up over 25% now, up over 36 levels. The VXN is up over 13.8, getting up to 38 levels. I think the VXN just hit a 1-year high. So last time you actually saw that was back in March. It was back in February of 21. So we just hit a 1-year high for the volatility on the Nasdaq. So VXN definitely higher. The last time we actually saw this was back in February. And SPX also breaking down now under 4,300. So 4,285, 42, 90 level is going to be that next support. So KSS, Kohl's Corporation, is up 31%. Wow. What's the catalyst for them? All right, so Kohl's confirms it received buyout interest, shares rise pre-bell. So Monday confirmed that it has received letters expressing interest in acquiring the company, but did not name the potential buyer. The department store chain said the board will determine the appropriate action that would be in the best interest of the company and its shareholders. Kohl's does not intend to further comment. God, don't want these alerts. Does not further comment publicly on these matters unless it determines it is in the best interest of shareholders to do so. So, interesting. So, potential buyout. Who do you think it is? It's only an 8.5 billion market cap company. Do you think Amazon could be a company that might be interested in Kohl's? Or do you think it's going to be, I don't know, maybe another retailer? Maybe Walgreens has no interest in Kohl's. I don't think Walgreens. Maybe Target? Because yeah, I mean, it could be any retailer. I mean, it could also be Costco for that matter, but we don't know unless of course there's more information. But this, again, if nothing really happens, you'll see kind of like this price action fade over, and I wouldn't be surprised if Kohl's kind of fills this gap back down. Walmart, yeah, it could be Walmart as well. But this right here, I mean, I wouldn't be surprised if it does come down if there's any if the deal falls through basically, or if it doesn't go through. For that matter, we've seen this happen before with PayPal and Pinterest. We've seen this happen before with several companies that wanted to buy another company, and then they kind of, pulled the rug at the last minute, and the stock was back down. Peloton, no, you're the only stock that is green today. What if this thing turns red? Last hope is Peloton. So let's take a look at S&P down 2.3, the Dow Jones 1.9, almost 2%, and the Nasdaq down 2.5. Volatility keeps pushing higher here, and we've got Bitcoin still just over 33,000 right now. Our hope has come to Peloton. Yes, that's what it's come down to. That we're really, really hoping that Peloton doesn't drop more, so that at least that stock can stay green. The bulls gotta win somewhere, right? The bulls gotta win somewhere. It can't be like a day where the bears just completely overrun the markets. We gotta win somewhere. So we gotta really flex Peloton today, right? The bulls really need to celebrate Peloton because, like I said, the bulls have to win somewhere, right? The next support for the Nasdaq is 13,000. So this right here is that next support at close to 13,000. Big gap down here on the Nasdaq. We certainly are way broken down below 14,000. So bulls haven't come out of the hibernation yet. Yes, definitely. 13,000 is going to be that next support, right? So previous technical support coming in from May 21. So that's the next level to watch. But that would put us down roughly 19-20% right now. But remember, we also went over, the buy and sell orders by Fidelity customers. I think that was a very, very interesting, research from Fidelity that they put out. And, it was nice to see that there were more buy orders, but at the same time, even though there were more buy orders, we had the stock prices sell off, right? There was so much selling pressure. I think that might be true today as well after close. I'm definitely going to check that for tomorrow, where the buy orders are versus the sell orders, because this can definitely be regarded as institutional selling. The volumes have always been high over the last couple weeks for the markets. So QQQ already, it hasn't even been an hour into the trading session. We're already up to 50% of our average 10-day volume, right? So QQQ already 35 million shares traded. For the SPY, we already have about 40 million shares traded. So it's only been an hour, not even an hour, only 40 minutes, and we're already up to pretty substantial volume in the markets. So PG, definitely waiting. Not really, because most of the stocks right now you'll notice are nothing but falling knives. They are breaking down support levels. They are selling off regardless of what the fundamentals or the valuations are. So in this sort of situation, there's not a lot that you can do. You can do plenty of stuff with options. But if you are a buy and hold investor, a long-term investor, then what I'm personally doing is just simply holding and waiting, and then of course, if the prices do continue to fall and we see some selling pressure getting exhausted, then I will consider dollar cost average at certain levels. But other than that, I mean, there's not really much to go over. I mean, what can you do, right? You can buy, you can hold, you can sell, right? Selling right now, in my view, is not the best thing because we're already down to such low levels, and as prices come down, risk definitely comes down. A lot of stocks you'll notice are now starting to get de-risked in the markets, right? So their risk from 3 weeks ago was much higher than where it is right now. So there's no point selling in my view. So I'm personally just holding and will continue to kind of dollar cost average and buy. All right, so thank you so much, you guys. It was a pleasure going over this market sell-off with you. And the Nasdaq continues to be down over 3%. I'm a little bit concerned. Hopefully, you don't hit a circuit breaker or something, right? So, but the Nasdaq definitely down over 3%. So big sell-off here. The S&P is down over 2.7%. And we got the Dow Jones also coming down over 2.3%. And the volatility is now up to 37. You guys, it's up over 30%. It's incredible. Up to 37, almost 30 levels. So, yeah, I mean, I can maybe stay here for maybe 5-10 minutes more. Maybe just do it for a little bit longer because this is insane. This is crazy. I feel like I've definitely got to be here, talk to you guys about what's going on. But yeah, pretty brutal day. It's not like the yields are jumping all that much. Where are the 10-year yields? Let's just go over to so CNBC, go over to the markets, and we'll go over bonds. So US Treasuries right here, I mean, it's not like the 10 years are going up all that much. In fact, we're actually down. So 10 years are at 1.7 right now. The 2 years are close to 0.983. So if you do some very simple math, 10707 minus 0.983, difference is now 72 basis points. So this number has definitely been coming down. So what that really means is the yield curve is now flattening a little bit more. So and this is, very interesting. This is the same as I think that Cathie Wood pointed out. I feel like, and again, I'm not vouching for Cathie Wood or there's several things that I disagree with when she's talking about valuations and fundamentals and whatnot. But I really like to listen to her from a macroeconomic standpoint because her economic analysis is top notch. How she kind of connects the dot with unemployment, interest rates, monetary fiscal policy, yield curves, all that stuff. I really like to listen to that. So, and this is what she's talked about time and time again, and how the yield curves are kind of flattening. And earlier we saw 130 basis point difference, then it came down to about 100 basis points and 80, and now we're sitting at 72 basis points. So the markets are really starting to have some concern around a potential recession. And that's what she's also mentioned in the past. But she's talked about how there's not going to be a recession, but just a fear about a recession. And that alone could cause the broader markets, benchmark stocks, to come down. So interesting that the yield curves are now starting to flatten a little bit more. But Dow falls 800 points, 7th straight down day, and S&P 500 pulls back, reaches 10%. So official correction for the markets here. Yeah, I mean, I think a lot of it could also have to do with, some fear and some shift in sentiment because, when the markets start to sell off, it's all about, who sold before who, right? That's the type of game it becomes, especially in the institutional side, because they don't want to hold on to losses and then try to recover the rest of the year to kind of beat the market. They rather just sit cash. They rather just preserve the capital for now as we weather through this volatility and then slowly and steadily start to come back in. So I think that's what's really happening in the markets right now. Of course, everything you see selling off, and Peloton only up over 3%. But as we've talked about, the market selling pressure will eventually get exhausted in my view. So AMC, let's take a quick look. So unfortunately, AMC down over 12%. The next support for the stock is going to be sitting right here at close to 1455, 1460. And yeah, that's mostly it. I think it now may be coming down to more of a fair value, so to speak. I mean, trading at $15, $16. I think this is where it was A few years ago, back in 2018, back in 2017, it was roughly at $15, $16 a share. So, I'm mostly concerned about the fundamentals and the underlying business. I know that AMC has been very, very popular among many retail investors and traders. But obviously on the channel here, we focus more on the fundamentals and the actual valuation and whatnot. So technically, 1455, 1460 is going to be that next support for AMC. Upstart down 16%, so definitely selling off quite a bit. Big sell off for Upstart here today. But anyway, you guys, again, thank you so much for being here. Really appreciate you guys. This was a little bit of a longer live stream because I think days like today do deserve longer live streams because it's just brutal out there. But I will be jumping over to our Discord to kind of send any type of buy and sell alerts. So VXN getting up to 40. So just got an alert here. Volatility is getting up to 40. But nonetheless, thank you so much, you guys. I really appreciate it. And make sure that you drop a like, subscribe if you're new, and also check out the Patreon link down in the description below if you want to join. Get access to now not only my buy and sell alerts, but also the option alerts that we're starting very soon. So now there are over 12 private channels in our Discord that you can access. And on top of that, you will also get tutorials included with the Patreon subscription, tutorials and fundamental and technical analysis and options trading as well. So we're going to include that moving forward. So thank you so much, you guys. I really appreciate it. And again, this is nothing to fear or panic. This has happened before. This is not the first time, and I can tell you this is not the last time it's going to happen. So thank you so much for being here. Really appreciate you guys. As always, make sure that you drop a like, subscribe. If you're new to the channel, we talk a lot about fundamental analysis, technicals, and of course, macroeconomic analysis as well. But take care, stay safe out there. If you have any questions, feel free to reach out. As always, happy investing. I'll see you guys in the next slide.